Just about everyone is trying to work out the collateral damage of the liquidity crisis triggered by IL&FS default. And of course, on India's real estate sector, how much will that be is the big question mark. On our reality today, we look at what this means for the home buyers. Delivery of over 5 lakh housing units across the country are delayed by over a year. Most of these are concentrated in the top 12 cities. There are unresolved cases of distressed projects. We know the names: Amrapali to BPTP, JP to Unitech, and even names like Mantri, HDIL, JC Homes and 3Cs, where buyers have been waiting for over 5 years for a home they've paid up 90% for. Will this current squeeze on funding to developers by non-banking financial services or NBFCs hit the project deliveries further? Should home buyers brace themselves for more wait for their homes? Joining me on this show today are Amar Mirani, MD and CEO of Xander Finance. I also have with me Gitambar Anand, Chairman and MD of ATS Infrastructure, Sameer Jasuja, Founder and CEO of Prop Equity, Shubhankar Dongre, Co-Founder of PropStack, and Mr. Vajinath MG, Ex-Chief General Manager, Real Estate and Housing Finance, SBI, also joins us with his expert views. The first question, of course, is to the developer here because he can tell us the inside story. Mr. Anand, have NBFCs and HFCs reopened their lending taps to developers or not? Everybody in October was saying, yes, we are facing a big squeeze. What's the status today?
So things have started moving, Manisha.
How much?
Very, very little. And it's not a good sign. You see, this panic, this created panic is, it's unprecedented and it's not required. You know, I keep saying this and we have this discussion, you and I. You know, if there is a problem of a smaller magnitude, it is always blown out of proportion so that, you know, the ripple effect...
This time I don't think you can blame the media. We've done nothing in this.
No, I didn't mention the media.
I'm so happy
I will come to that as we go along.
All right.
So like yesterday you saw, you know, they were talking about Lodha day for yesterday and about Piramal Enterprises taking a hit. Somehow everybody wants to sensationalize anything that is happening in today's market. And that is not a good sign for the end home buyer. That's who we are here to discuss about today. Because, you know, every signal on national television, every conversation on national television, every news in the newspaper, it's somehow, if it is magnified to a very large level and, you know, the message that goes out is, oh, be ready for a huge crash. Oh, be ready for somebody big coming down. It's not a good conversation to have because end of the day, you know, these names that you mentioned and the delays that you mentioned, they have been there for the last year. We've been discussing this on the show. So please, let's not aggravate the situation because there are good developers, there are good companies who are delivering, there are good companies who are eligible for good credit from NBFCs. Somehow or the other, this fear psychosis in the NBFCs is also crept in. Oh, be careful now, let's not, you know, let's be careful, let's look at even the good players with a magnifying glass. So it's not, it's not in the interest of the home buyer.
Anybody, on that front, Mr. Anand, I think I'm going to completely differ from you. I don't think anybody is talking about the good developers. Lodha was a case when you have a bond yield rising to 23% on a single night, and then it was immediately followed by the news that they have put 2 London properties on sale. Yeah. So there is a connection. Even grade A developers...
But there was panic in the market, wasn't there?
Yes, there was panic in the market. Okay, let me get the other views here. Amar Mirani.
So was it justified?
Amar Mirani, are we panicking too much? I mean, are the markets overreacting to a news like what has happened to Lodha bond and then Piramal Enterprises stock taking a hit, and of course this entire
how's the stock today? I want to know.
Okay, entire cloud of worry that we have with developers now being fully dependent on NBFCs to finance operations, repay old loans, and even pay for land. Is it anywhere a hand-to-mouth survival sort of a situation, or do you think we are not going to come to that?
Yeah, so I think basically last few years, if you see, NBFCs and HFCs have been funding developers in a much larger way than what it used to be 3, 4, 5 years back. And today, I think NBFCs and HFCs contribute about 2/3 of the funding to real estate developers across the country, amounting to about 3 lakh crores or thereabouts. Of this, about 2/3 of this again would be the non-LRD, non-rental generating, so basically the development play, if I can call it that, to developers across the country. And as you correctly said, developers have engaged with NBFCs. NBFCs have provided financing for land, construction, pre-approval, cash outs, project development, and so on, leaving aside the LRD bucket. Now, there are of course ripple effects of this entire ILFS episode, but it's just I think ILFS episode is the last thing that we have seen. But even before that, it was evident that NBFCs and HFCs have been on a pretty aggressive drive towards growing their books and at times reducing the credit standards. And we've seen this play out in the last year or so. So now what we've seen is the liability side problem of the NBFCs and HFCs, where the short term was funding long term assets. And that is getting corrected and is getting addressed, because if you look at the last 1 month CP issuances and the last 1 month short-term financing that most of the NBFCs and HFCs that was stressed have raised, the immediate problem of repayments and redemptions seems to have been addressed. So for November and December we should be fine. But having said that, I think the bigger issue that will arise in the next few weeks or months is also the asset quality side of the NBFCs and HFCs that have grown way too rapidly compared to what the market opportunity is and was. And that is what I think will start getting exposed as the weeks and months go by. So I think the problem is something that now NBFCs and HFCs have started realizing, and therefore there's a slowdown in funding to real estate developers. And I think the slowdown will only continue. It's not that it's a short-term issue, and while the larger NBFC and HFC problem is sorted out or is getting sorted out, and therefore funding will occur to SMEs and car loans and gold loans, all that will gradually in the next few weeks will come fine. But I think real estate will take a longer time, maybe a few quarters, maybe longer than that.
Few quarters now.
Really,
so two things, Amar Mirani, you've raised two things which of course have also been bothering me. One is the asset quality side. At all points we say, and Shubhankar, you need to come in here. At all points of time we say that, look, why are we overtly worried about NBFC and housing finance companies' portfolios to real estate? Because these are asset backed, right? And this is my big question. What is the quality of this asset, especially in a market where sales have been extremely sluggish? How much do you depend on it, and have these assets been overvalued, and therefore now in a environment where sales are slow, how good are these assets?
Manisha, I just read a very interesting stat couple of days ago. It comes from some RBI data. You know, for the period July to September 2018, outstanding home loans grew at a very healthy rate of almost 16%. Now that kind of is slightly, at least to the naked eye, a bit contradictory to what we've been hearing out in the market, and talking about sales velocity for the past 3 or 4 years. But as you dig deeper into it, you basically get to see that pretty much after the double whammy of black swan events, GST and RERA, that happened a little over a year ago, you've seen quite a bit of movement happening towards sales in completed assets. And maybe that is an indication of the sentiment of the buyer, on their perceived risk on completion of assets, quality of new assets, so on and so forth. So I really found that as a very, very interesting stat to look at and you really dive into.
Okay, then the other big question is that,
Hello?
Samir, yes, we got that. Samir Jasuja, so if you're saying that most of the lending is going to really almost completed projects, then how alarming is now this freeze on funding to developers? We already have a statistics from Prop Equity that first half of this year we had over 4 lakh units delayed. There were 1687 projects delayed. So is it the same projects which are now likely not to get delivered, or do you think that new ones are going to get added to this list of delayed projects?
Well, I would like to say is that with respect to the construction projects which are ongoing right now, there is going to be a further delay. NBFCs have clearly gone very slow on lending, and rightfully so, because they've really not looked at the asset quality of the collaterals that they have taken. It's very important for them to now validate those asset qualities before going and further lending on long-term assets by taking short-term loans. So that is going to be a huge challenge with respect to under construction projects. There are going to be further delays. There are going to be category B developers that are going to fall, and that's going to create slightly more panic in the market, in probably not now, maybe 6 months from now, post the elections. And there is a cause to worry in the market. And I would say that the consumer should be very careful in buying ready projects. They should not look at category B under construction projects, at least for the moment. They should make sure that the project is getting delivered before they buy into it, or they could buy into very reputed developers. That's the other option.
Okay. Mr. Vajinath, come in here, sir. I mean, the cost of funding, not only has funding dried up, but the cost of funding in this liquidity crunch has also gone up. And this is something which has been validated by several experts that I've spoken to by 200 basis points. Now, we have a developer community which has been facing 4 years of slow sales. It's got hit by RERA, it's got hit by GST, it's also got hit by demonetization in some ways. Tell me, I mean, do you subscribe to the view that yes, there will be more developers who are going to come or get into that distress bucket, or do you believe that no, that will not happen? The already distressed projects are the ones which may not see the light of day very quickly.
Yeah, Ms. Manisha, my views will be personal. According to me, the situation is not that gloomy. The temporary disruption what has happened because of the mismatch in liquidity, asset and liabilities of these NBFCs. According to me, it is a temporary phenomena. And NBFCs and housing finance companies, we cannot ignore the role what they have played over the years. If we look at the incremental disbursements in home loans, almost 50% are coming from housing finance companies and NBFCs. And they have built very sustainable and viable business models for capturing the business from particularly unorganized segments, which were earlier not touched by the banks. So definitely the role what they are playing is quite important for the economy as well. And we cannot also ignore the fact that the bankers, most of whom, including the public sector banks, are totally focusing on the housing sector and real estate sector. And they continue to be the largest lender to even the builders, if not directly through indirect means, that all for under construction projects. You see, the banks are lending home loans to individuals, and indirectly those funds are going for construction of the project.
All right.
So I feel that there
you
is
feel that we are overblowing the situation. Okay, I got that point, Mr. Anand. So you finally, I saw a smile on your face when Mr. Vajinath started talking.
Manisha,
okay, let me ask
we are
you.
On national television.
My job is to ask some questions on behalf of the home buyers.
Yeah.
Can you tell me on national TV, now that you said national TV, can you tell me with complete certainty that there will be no more from the list of developers and the project 1687 4.5 lakh units delayed by over 2 years, we will not have any more additions to that list? Can you say that with certainty?
Manisha, you
and that
know,
is the question I'm
you
asking
have been saying on the show that new launches have come down only by, last year it was another 16, 10, 11.
Sir, answer my question.
No, so then how will it increase? But Manisha, these names which you have been taking for the last 2 years.
I'm saying beyond these names, we will have no new names getting added to the delay list because of this liquidity
I would rather
crisis?
that we don't have any new names added. And I'm very optimistic on that, because today there has come, all developers have realized that they have to shape up or ship out. So there's consolidation happening. People are coming to us with their lands and saying, okay, bail us out, complete our incomplete projects also. People have come to me with that also, that why, we've got the structure up, why don't you come in now? Well, that's a separate thing, that, people will not do any, uncalculated decisions any further, the real estate developers. Coming to the fact that NBFCs have frozen disbursements to the retail, they haven't frozen.
Wherever slowed down.
They have not. It's a compulsion where I think there was some repayments on the commercial papers.
Okay. Those
NBFCs have actually stopped disbursing home loans which were sanctioned, which again is a very bad sign for the home buyer, because what is his fault? So somewhere or the other, the RBI has to step in and say, at least start the retail funding which you have sanctioned. It's not a good sign, because
So that, according to you, is a worry point, and we need a very early intervention on the retail lending side. I think that's an important point.
Absolutely.
Normalcy returning. I'm going to very quickly ask all three of our experts now. Shubhankar, starting with you. When do you think, I mean, is it 1 quarter, 2 quarter, 3 quarter for normalcy? Normalcy means that, I mean, NBFCs are now comfortable again to lend and lend to real estate sector. When is that likely to return, according to you?
Manisha, it's a very difficult question you ask us. You know, there is no straightforward answer. I can't really come out and say 1 quarter, 2 quarters, 3 quarters. But I think the immediate focus of the NBFCs right now is asset management, taking a deeper look at their own books right now. Maybe a little bit of cleaning up as well and getting a grip of, you know, everything that's been going on for the past 3 or 4 years. I think that should at least take 6 months, if not more.
Okay. 6
but
months.
Having said that,
all right.
I can't confidently say.
6 months is fine. Amar Mirani, you said couple of more quarters, but can you put a timeline to it? I mean, where you feel that their nervousness will continue, and after that, if you're able to ride that period, then India's real estate market, which needs stability, will get it.
Yeah, Manisha. So I think there are quite a few issues here. One is the liability side issue, which has been addressed. The asset side issue is not yet fully, like Shubhankar said correctly, people are looking and introspecting in their own books, which they should have done long back, but better to do it now. So that will continue for more time. But I think what's also happening at this point, and in this last quarter and this quarter, and even going ahead in the next quarter, is the fall in sales, absorption, and registrations in our key cities. And that's on account of the NBFC and HFC crisis of not disbursing, and therefore retail sales are taking a hit there. And second, also the crisis of confidence that's come about because of the ILFS crisis. So therefore, this quarter and next quarter numbers will take a hit, a significant hit in my opinion, and therefore that will also start reflecting in a lesser confidence from NBFCs and HFCs in the coming quarters. So I think to expect the kind of irrational exuberance that was there for 3 to 4 years from 2014 onwards till 2018, I don't think that will come back in a hurry for at least a year. And I think there'll be a further softening of the market. There will be, obviously it won't be across and as widespread as people think or may think. It will be largely to tier 2, tier 3 developers. Tier 1 would largely survive, but given the fact that the market would be soft, and given the fact that a lot of opportunities of consolidation would be available for tier 1 to buy or do JDAs or DMs with tier 2 developers and tier 3 developers, there may be also a case to sell stock at a clearing price for all kinds of developers to reduce the debt and to buy better land parcels at attractive prices, even for tier 1.
All right. Softening of the market, and of course on the pricing, where, you know, in pockets at least, could there be few distressed deals available? Will the number of delayed projects cross that mark of 2,000 with the new liquidity crunch and crisis in the real estate market, where lending for realty from banks and NBFCs has slowed down substantially? Samir Jasuja, that 1687 figure, my larger question is just that. Mr. Anand says, let's not spread the panic. But we have other experts who are saying, look, we have not yet seen the asset side of, or the quality of assets in the books of NBFCs. So you can expect softening or the market to remain soft on sales for the next 6 months or so at least. What happens in this period? How many people have the wherewithal to actually survive another extended period of 2 to 3 quarters of slowdown in real estate?
Manisha, first of all, you know, we have to be honest here, and we have to also look at it from a consumer point of view, right? This whole mess that has been created over the last few years is not brought about by anybody else but the developers, really. It's been greed, it's been gut, it's been risk taking, it's not been looking into market research. They don't spend any investments on actually understanding the markets and go about launching. And $50 billion of real estate, we have data and we've proven that is is stuck for the last 7 years. That goes on to say what's really actually happening on the ground over there, and that cannot be challenged, first of all. As far as the NBFCs are concerned, there is no asset quality tool in the market that is available today for them to even judge what assets that they hold, and the collaterals that they've taken, which is 3x and 4x, if they go out in the market to liquidate, who will be the buyer for those assets? The developers' market share of the top 10 developers has gone up to 70 to 80% in various cities, which used to be 20 to 30%, because 90% of the developers have actually fallen off the cliff, literally. That's the reality on the ground. They are going to eventually be only landlords, and they will have to get into JDA situations to be able to get exits, so to say, and to be able to service those heavy loans that they've taken earlier to complete the projects that have been delayed for the longest period of time. So let's be honest and frank here that 6 months, there are CPs that have got rolled over, but how long will they keep on getting rolled over for is the big question, because these are long-term loans that have to be serviced, and there's short-term debt that has been taken. Namar is absolutely right on the asset liability mismatch that has got created at the NBFCs. NBFCs have come and bailed them out, which has been fantastic for the market, because really ready projects are selling and there is demand for ready. But as far as under construction today is concerned, we all know that the market has shrunk by 90%. And there are no new launches that are happening compared to what used to happen previously. And that is clearly why they're not happening, is because there's no demand. If there was real demand in the market, then there would be unprecedented new launches that used to happen in 2010 to 2013. So we have to be a little responsible, is to be able to at least tell everybody what's happening on the ground really, and to be able to be cautious and not let the same thing that has happened in the last 4-5 years happen again. So my suggestion to everybody would be that be cautious, including NBFCs, look at your asset quality and then go forward, because the more mistakes that we make now, we will have to suffer going forward later. I would highly recommend people to look at this documentary that came out in 2010-11 called The Inside Job, which talked about the subprime crisis in a very, very serious way and what really happened thereafter. I'm not saying we have a subprime crisis like situation over here, but the situation is pretty serious right now. Everybody has to look into it, introspect, and take the right steps and be very cautious going forward. You cannot just keep on saying the market has no problem, it's a short-term problem. It has to be addressed at the government level, it has to be addressed by RBI, and then taken forward, because this situation is going to get bigger and bigger as we go forward.
Okay, Mr. Vajinath, very quickly, if you could come in here, sir. Mr. Vajinath, will new names get added? So one is that, of course, the existing list of developers who are anyway, crumbling under the weight of not having any funds. The funds have got siphoned, or, they've just disappeared from the books for buying land parcels, etc. I'm asking you, new developers, B category developers who have already put some of their assets out in the market to try and service some of the debt, do you think that there will be delays from a new list of developers?
You see, it will be very difficult to generalize and make a general statement like that. But what I would say is that the interest rate, what you had asked me earlier, you see, if we look at the interest rate for the common home buyer, it was more than 10% 4 years back. It used to be more than 10%, 9 to 10% 3 years back. Now it is hovering around 8.5 to 9, 8.6 to 9%. So the interest rates are still very much, affordable for the common home buyer.
I'm just wondering, when will this down period end? It's also a very, very big economic contributor.
Yes.
It is an economy problem, isn't it? When your real estate slows down, if Samir says that the real launches number of launches have come down dramatically, buyers only want to buy ready projects. We have a systemic issue which the government does not seem to care about, or at least be aware of. But you all are very happy with this government?
There were bad stories, and there have been bad stories for the last 3 years. We've been discussing
Are you happy with the way the sector is performing right now? Forget the bad stories. Let us forget about it. It has shrunk dramatically, the residential market, in terms of new launches and buying.
But not in respect of demand. There is still a demand. How can anybody say that the demand has slowed down?
We are not talking about that.
Samir just said that there's not a demand. So the offtake is not there because, like I told you, we've been discussing, there was a trust deficit. Now, in the last 2 months, since October, September, October, things were going pretty okay.
How can that be said?
We were in a better place. And now, suddenly, when the NBFC crisis comes in, there's again a disruption. So what is happening, Manisha, is that a situation is being created where slowly, with a lot of negative news and a lot of negativity, a sector which has the capacity to perform and support the economy with a double-digit contribution will eventually, it'll be killed, it'll die. There is an opportunity, there is demand, is documented, there's a documented demand of housing across, various segments of the pyramid of demand. But if we keep bashing the sector all the time and saying, they are responsible for their own problems, but there is potential here. Why don't we look at the potential here and actually spruce up the sector and the economy?
Gentlemen, thank you very much for joining me. Shubhankar, Sameer, Amar Mirani, Gitavar Anand and Mr. Vajina, thank you for joining me today. And we are only hoping and keeping our fingers crossed that home buyers get their homes in time and whatever trust deficit there is gets restored sooner than later. Goodbye.